All right, it's 8 a.m. Central Time, so let's go through the exercise and set up some trades for today. So the 45.87 quarter to 95 quarter is the key support that buyers need to hold in order for the recent range and balance to remain in play. And so far, the overnight session has been quite bearish, so we have to be open to the possibility of a breakdown below 45.87 quarter to 95 quarter, but it is support until broken. Now, on the upside, we have the most aggressive area of resistance at 45.97.75. So we know that if the market continues to hold below 97.75, which is yesterday's RTH low, then it could result in a breakdown below initial support as well, which would serve as an intraday bearish confirmation. So what we want to do is make a copy of this and set one up as a short. So in the event that we do break down below initial support, it can then begin to act as resistance, and we should be open to shorting that area as well. And we can even set up an intraday balance breakdown idea below the 87 quarter support. So in the event that the market balances at initial support and then puts in a breakdown in that situation, we'll be using the intraday balance breakdown setup. And on the downside, we are going to exit at around 60.5, I think should be okay. For now, I'm going to set it to 61, and then we'll assess based on the real-time situation. So the targets obviously can always be adjusted, but right now, scaling out at 78, which is ahead of the next support zone. High probability target is the larger time frame support, the multi-day balance area low, and the final target is within that zone, and the final target might get adjusted by a little bit, but you can see it doesn't make a huge difference in the reward to risk. So we'll come back to that final target once we've tweaked the long setup at the balance area low. So on the upside, we want to scale out ideally within the aggressive resistance zone, because if the market is going to head lower in any significant way, then I think ES would hold below 45.97.75 to 46.02 quarter, and shorting that area I think is a move that's a bit too aggressive, and the only time it would make sense is if we were just noticing excess weakness, or perhaps one of the other market puts in a wide range breakdown bar below its recent lows or something along those lines. Then perhaps we can use that inner market bearish divergence to take a short. But even in that situation, I wouldn't want to have my stop at 0.3 quarter. I would want to set it up where my stop is actually behind the next entry of 0.6. And again, that would in itself still be quite aggressive, and on the downside would be using the support areas as our targets. And similar to this, we can change this to 64.75 as well, so that gives us a little bit more leeway on the entry there, so at 99. So if the market is going to head lower in any meaningful way, I think that sellers will need to hold ES below the 46.06 quarter 13.75 zone. I think if we take that area out, then there would be sufficient strength, or an indication of strength in the market, that we will not then break down. At that point, we would pretty much have a confirmation of buyers stepping in at initial support. And given the importance of initial support, it would be perfectly fine to enter long in the pre-market session. So you don't necessarily have to wait for the open. For example, if the market's giving you 45.94 or even better as an entry, then I would just take it. The ideal entry would be like something like perhaps 92, or somewhere along that price level, simply because our scale becomes significantly easier to hit. I think the high probability target in this case should be ahead of the 1375. So, we're going to go ahead and change this to 1275. And our final target in this situation can be the overnight high area around 22. So, you can see that if you're entering long at 92.75, scale out is within the aggressive zone, you're getting 3R, that would be a good price to get in on, and then scale on the way up. As soon as 99 quarter hits, your risk will get cut by half. At least that's the way I have my own trading setup, where I scale out of 25% of my position at 1R. And that effectively cuts my risk by 50%. And after that, if I choose to tighten the stop, usually the risk will go to zero. And within Vulcan, we have a column called open risk. So it starts off as 1R or whatever risk size you use. So if you choose to use double the size, it'll start off as 2R. And then once that scale out gets hit, the open risk will change to 0.5R, indicating that now you have 50% of your typical risk on. And seeing that change from 1R to 0.5R psychologically can be quite beneficial, because now it's much easier to hold on to the remainder of the position. And that idea works out really well, especially in balancing type of markets. On a trend day, you may not want to scale out and you may really want to press your position, and that would be the ideal way to handle a trending type move. But we know that 90% of days in the S&P are not trend days, and only 8 to 10% of days end up being trend days. So we can't come into every session just expecting home runs, right? Because that just doesn't happen often enough. If I'm going to bet on the market being two-sided or putting in, two-sided swings, even if the day might be directional, on most days S&P is going to put in bounces at support, rejections at resistance, and there's going to be a lot of back and forth, even if on the larger time frame, like a 30 or 60-minute chart, you might think the market's going in one direction, but in between, it's actually doing a lot of back and forth. So if I'm going to bet on a day type, well, if trend days only happen 8 to 10% of the time, why would I bet on that? So selectively, we can get more aggressive when we detect a trend day early enough. And if the market breaks down below initial support, then it could trend into the 45, 53.75 to 64.75 area. But expecting a full-on trend day, I think, is just low odds, statistically speaking. So on a balancing type of day, or just to kind of deal with the back and fill nature of the S&P, that scale out can be quite beneficial. And if you want to ever think about the cost of the scale out, what you can do is just uncheck scale. And the difference between what the value was for the expected R and what it is now is your cost of the scale out. Like, that is how much you're giving up to get that 50% risk reduction very quickly. So in this case, we're expecting 3R on the trade. And if we don't scale, we get 3.65R. So I'm giving up 0.65R, essentially, to make the process just so much easier for me. And it's easier psychologically. And then, of course, that allows you to perhaps hold for those more extended targets, which you may not do if you did not take the scale out, right? If you don't scale out, maybe you end up short-circuiting the trade. So if that's a possibility, right? If there's a possibility that you might short-circuit the whole trade sequence by not scaling out, well, then it's probably worth the 0.6R to just take the scale out. Especially, I think, on a day like today, when the overnight session has been quite weak, and even if the market does end up going back up, it may kind of do so in smaller steps and sequences, and it may struggle to go back up. So in that type of situation, I think it's even more beneficial to scale out. So that's how we can set up our initial support long. We are not going to be trading the 69.75 to 77 quarter zone on the long side because in order for the market to even get there, we would need to see a balance breakdown pattern below 45.87 quarter. So I think that the sellers will at that point be confirmed to be in control, and we can probably still anticipate a reaction at 45, 69, 75 to 77 quarter, but I don't think we're going to get any notable reversal unless in real time we are noticing just a lack of momentum, or perhaps if one of the other markets reaches its own more significant support before the S&P reaches its significant support at 45.5375 to 64.75. But by default, I am not planning on trading the 69.75 area on the long side. I'm going to use it as a profit target, but I'm not going to trade it on the long side. Now, the 45.5375, by that point in time, the market would be exhausting the range potential. So I think it does make sense to trade that on the long side. I would prefer to get an entry towards the middle to back of the zone. So 56.5 to 59 quarter is, I think, what's going to work better in this situation. And I'm also going to make a variation of this where I'm using a slightly wider stop, and I'm putting the stop down at the next zone. So I'm going to put it at 50, and that's in the event of a back of zone entry. Middle of zone, I'll leave it just 1 point beyond the zone. And in this situation, if the market is putting in a larger time frame move, or at least a 2-day balance breakdown, then 87 quarter, 95 quarter will become significant resistance. So that should be my final target, not my high probability. The high probability target in this situation, I think, is probably going to be towards the top of this broken support. So I'm going to change the high probability to 77 quarter here, and actually let's just change to 77. So 77 for this one, and the high probability I will put 1 point ahead of the 87 quarter zone. So 86 quarter. So in this case, we can see 58.75 gives us 3R. And if we're using that kind of more conservative stop placement into the next zone, then 56.5 gives us 3R potential. And now we can revise our final target, or at least consider it. So our final target here is 59 quarter. Okay, that's ahead of 58.75. I'm comfortable with that. Let's also revise this final target to 59 quarter as well. So that's what this looks like. So 2.8R, 2.4R, depending on the specifics of execution. And that looks good so far. Let's take a look at initial resistance and the larger time frame resistance. Now, if the market reaches initial resistance, I would expect a reaction at initial resistance, but I would not anticipate a reversal. I'm still giving more weight to the 45.87 quarter to 95 quarter key support. And for that reason, if we end up pushing back up into the 46.16 to 26 quarter area, I would anticipate that to be a spot where the market will likely put in a reaction, but a reversal is going to be much less likely. So I don't want to be aggressive on the short side there, and I may not even short that area. I like to trade in direction of the dominant side. The intermediate time frame bias is currently bullish. And if we go all the way back up into initial resistance, I would need to see something in real time to trigger a short. So as an example, if we go back up into initial resistance and there is a bearish disconnect, which I don't anticipate, but if that were the case, where the advanced decline line is still in negative territory, even though ES is pushing or trying to break above yesterday's high, then I may consider that area as a short. Otherwise, I would expect some chop and reaction at 46.16 to 26 quarter, but not necessarily a failure because that move has already happened. The market usually doesn't do the same thing 2 or 3 times in a row. We have already seen sell responses at that zone for the last couple of days. So the likelihood of another failure at that zone and a significant reversal back down to initial support seems low odds to me. So at initial resistance, can we get a reaction where perhaps the market goes up there and kind of struggles a bit, maybe, pulls back into the 06 quarter, 1375, and then that holds as support, and then we kind of balance? Yeah, that can happen. But a complete failure rejection followed by a move all the way back down, that seems low odds. So I'm going to set the high probability to 1375, and I'm going to set the final to 07. As you can see, that gives us a back of zone entry if we want 3R. And if we just want to get 2.5, then 25.75 will give that to us just for a move down to 13.75, and 23 quarter would be the most aggressive entry in that situation. So I think I'm going to structure this trade this way actually, where the high probability and final target are the same, because I just don't anticipate a bigger move there, and I think it makes sense to play defense. I think that the next zone, 31.5 to 37.5, is a significantly better area of resistance, and we would need to see signs of initiative buying in order to take that area out. So given the level of weakness that we've seen in the overnight session, if the market pushes all the way back up into 46.31.5 to 37.5, it would be relatively exhausted. And I would anticipate that zone to cap the upside on the day, or at least it certainly has potential to cap the upside on the day. Now, that's still going to require a real-time read because I want the market to be relatively exhausted heading into the zone, and I don't want to see excess strength in the market, and I don't want to see the NYC tick holding completely above zero and printing, nice upside values. If that's the case, then the market would have to be overextended into the zone in order for me to consider shorting it. But similar to the idea at initial resistance, I think even this zone calls for defense. So I am going to target the overnight high and the RTH high from yesterday. So you can see 35.5 gives me 3R, and that is something that I would consider. If the market actually pushes up there and it's not late in the afternoon, I don't take last hour zone fades. We know those tend to be much more risky. So as long as the market hits that zone early enough in the session, it's something that, would be up for consideration. And same goes for the initial resistance zone. But I think if we're going to get a bigger downside move, the market needs to hold below 46.06 quarter, 1375. And that's why I don't want to short these upper zones, because simply by reaching these zones, the market would be communicating to us that it is now in a stronger state. If the market is truly weak, it should not get to 16 to 26 quarter. And if it gets to 16 to 26 quarter, then it is probably no longer in a weak state. So that is the prep for this morning. Hope you guys find it to be helpful. And if you do, then please do share the video with other traders. Take care, and I hope you have a good trading day.